All right, welcome back. Off to our first new current liability. So to illustrate, let's think about when we were selling merchandise back in chapter 6. Okay, so if you remember when we sold merchandise, let's say it was on account, sales, revenue. And of course, we always had a second journal entry to record whenever we sold merchandise. The second entry was a debit to cost of goods sold and a credit to inventory to record sale and cost of items sold, right? So if you think about whenever you go to, a bookstore, Barnes and Noble, or an electronics store, whenever you buy something, there's the sales price, right? The sticker price. And so maybe the sticker price says $30, right? But that's not the same amount that you end up spending in cash, right? Why? Because it's $30 is the sticker price plus sales tax, right? Just like when my daughter's like, "Oh, I have $30 that I can spend. I found this, toy for $29. Can I buy it?" And I'm like, you have to account for sales tax, right? It's not just the $30 sticker price. You have to include sales tax. So same thing here when we make a sale. Let's say the customer pays in cash, right? There's our sticker price. Let's go ahead and use the example of here, $30. The cash that we collect is going to be more than the sales revenue because the customer has to pay for sales tax. Let's say sales tax is 10%, so that'd be $3. So the cash the customer pays us is $33, okay? Now, some of that is the sticker price that goes to sales revenue. The rest goes to sales tax payable, okay? Payable. That amount must be remitted to local tax agencies, right? It's not ours to keep. It's not the company's to keep. We are simply kind of acting as an intermediary. We are holding this money from the customer. It's not ours. We definitely can't call it sales revenue. It has to go to the state or local tax authorities at the end of the period, right? So maybe the sale happens on the 5th, January 5th. Maybe at the end of the month, we have to remit all tax that we've collected, debit the liability. Okay, it is a liability because, again, we owe this money to the local tax agency. And then credit cash to record remittance of sales tax. Okay, so if this was our only sale, it would be $3, but more than likely we would have multiple sales during the month, and the sum of all the sales tax we've collected would go into that entry of remittance. Okay, so that's one of the new current liabilities we are introduced to this chapter, sales tax payable. Again, it's a liability because we have to give it to another party, right? Another party, so it's an obligation. It definitely needs to be paid within 1 year. It's usually end of the month or end of the quarter, depending on the size of the company. Okay. In the next video, we will look at an example